Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. There's a big week on tap. We have a Jerome Powell speech today at around, I think, 1:55 p.m. Eastern Time. We also have major data. We have JOLTS tomorrow at 10 a.m. That's job openings. We've seen a steep decline in those job openings recently. We have ADP private sector on Wednesday and the non-farm payrolls on Friday. So we're going to get a good sense this week of where the labor market is. Now, the highlights from this morning and from overnight last night. China, more stimulus, cutting basically the mortgage rate by 50 basis points. That basically kickstart even more stimulus. This is the third time China has announced more stimulus measures, and you better believe it, the Chinese stocks are ripping even higher today. Incredible moves. We're talking like some of these stocks like JD up 60% in a week and a half period. Unbelievable. I actually think it's starting to be a short here for a retrace before the next potential leg to the upside. In the trading room today, in the Apex Live day trading room, I already have my levels scoped out for those type of stocks. We'll see if they get to those levels, and we will be looking to trade them. All right, first and foremost, we have the S&P and the NASDAQ futures are down just a little bit. Let's jump over to the screen here and take a look. So follow me over here, guys. What do we have? We basically have the S&P 500 closing right around here on Friday. So if we can draw our line right there, that's where we closed on Friday. You can see we are trading lower today. Now, the kicker is this, right, is that you had so many kind of weird narratives being spun over the last couple weeks, and I've really talked about that, guys. I've really talked about how these narratives, to me, are very contrived. It's almost being done as an emergency measure. We talk about emergency lending programs by the Federal Reserve and all these different things that the government does. This almost seems like the institutions are in panic mode, and they're like, we have to keep this market up. We have to get more individual retail investors in because we have to be able to unload to them. Because again, the narrative spinning has been so obvious. Usually it's a little bit more subtle. Not so subtle recently. So just keep that in mind. Markets nonetheless are trading down today. I want to show you this chart on the SPY daily chart. This is one I harped on last week. If we can flip back to the charts there and take a look at this, guys. Remember the doji? This was when the next day after the Federal Reserve cut rates. A doji, again, has a little bit of a wick on top, a tail on the bottom, and it closes flat in the middle right there. Notice how the high of that, we opened above it on Thursday, we closed below it. We opened above it on Friday, we closed below it. The market is struggling to take that out. Remember, I said that if we take that out, we should go to 6,000 on the S&P 500. Now listen, it's still a chance they'll be able to spin these jobs data numbers coming out. We all know how that's going to go, right? We all know, right? So the jobs numbers probably come out, weak or whatever, and then, or maybe they'll come out strong, and then the revisions the month later. And by the way, that's one of the things I'm going to watch very closely is that we get that jobs number on Friday. Do they revise last month's down even more? If they do, you really can't trust these jobs numbers whatsoever. You have to assume they're weaker than anticipated or being reported. All right. Now, a couple other things here today. We do have some bad news out of Stellantis, so we follow me over here. We can take a look here, guys. So Stellantis is down about 10 to 13% here pre-market. This, again, Dodge maker, Ram maker, a car maker, essentially, for those of you that may be out of the country that aren't familiar with this company. But they basically said they're looking to get rid of inventory or lower inventory because they're seeing weakness across all markets, guys. This is another cue that is telling us that the individual consumer is beginning to pull back just a little bit. And again, it is affecting the big ticket items like cars and even houses. Housing has really slowed down. Granted, prices haven't declined that much yet, but I do think as the economy weakens, we will see more of that. All right. So Stellantis is in play here. Let me go back to the chart here and we'll just take a look. Look at this chart. If we go back to the chart, look at how much this is down already, and now it's down another 13% pre-market, trading below 14. If we look at this, we have the lows here at around 1477, so we're already below those lows. So the question is, where is your next level of technical support? And to be honest, there's a good gap fill right down here at around 1360. 1360 would be a first initial potential trend line for an entry today, and this would be more of a day trade. But nonetheless, 1360 is on the radar, and then if it continues down, there's a secondary gap fill at around 1220, followed by double bottom, even triple bottom down here. So once you get in this lower range, I think this first one's a day trade. This might be a swing trade. Look at how beaten down it is already, but nonetheless, start to look at those levels on a swing basis. All right, let's talk some Nvidia this morning, guys. We are seeing Nvidia under pressure this morning. So a couple things to note here. There's definitely been some chatter about China starting to play catch up, not only with stimulus, obviously, for their economy, but also in the chip sector, coming up with new chips, maybe potentially starting to dilute the chips if they start making chips that rival what Nvidia is doing. We're seeing the whole chip sector under pressure. And you can see, again, if we look at Nvidia here, Nvidia closed right up in this range on Friday. It is down over $3 pre-market here. Now, again, if you're part of the stocks, the smart money stocks and ETFs, we did pick up the SOX, the SOXS, which is a triple short SMH or semiconductor play. We are in the money on that, obviously, based off this move. On a technical basis, the semis were a short late last week. All right, couple other big players here in the motion in pre-market. We're going to go to Bitcoin in just 1 second, but we are looking at Meta basically holding flat. Apple, let's take a look at Apple here. The daily Apple chart, look at this on the chart, guys. See this trend line right here? Notice how it keeps trying to get through. Here's your first pivot, your second, your third, and even your fourth here. Is it going to get rejected down to this area of support, or will it push up and break out, in which case you'll test the all-time highs? And by the way, with Nvidia, same thing. Look at that. Right there, it opened above, got rejected, and then on Friday fell, and guess what? It's trading down in this range today. So you can see these trend lines working magic right now, keeping price under wraps versus what we are currently seeing in some of the other areas like the Chinese stocks. So let's go talk about the Hang Seng stock market here. This is the China stock market, and one of the most incredible rallies. Let's follow me over here and take a look. Look at this move on the Hang Seng market. Now, again, imagine if we were here and we were saying, wow, in the last 2 weeks, the S&P has rallied 20% or more. Well, that's what the Hang Seng has done. Now, listen, it's not even close market cap-wise to the U.S. markets, but nonetheless, it is still a massive move. And again, what type of candle is this, guys? Remember, we just looked at a previous chart talking about on the S&P where you had a tail on the top and a tail on the bottom with a close in the middle. And to me, that looks very similar to a doji pattern, which is a potential reversal signal. Now, listen, I'm a huge bull. I was a huge bull a month ago when everyone else was hating on the Chinese economy and the Chinese stocks. I said, guys, these charts are primed. The technicals on the charts are looking so good. There was positive divergences, downsloping bullish wedges, everything you wanted to see. But now, again, this shows that I'm not a one biased person, right? It's like, this is way too much. I would expect a retrace back down here and a pullback in this way, right? So maybe back to about 19 to 18.8, somewhere in that vicinity, and then I think you buy the dip for another move to the upside. But right now, you can't be chasing this. And by the way, I read this about this morning. I do lots of pre-market reading and see what all the avenues are. I look for where's the hype, where's the narratives, all this kind of stuff, so I can report to you guys and let you guys know what's going on. But a lot of reports saying that in China, the retail crowd, the retail investor over in China is climbing over everyone else, trying to get in these stocks because they're running, and they're all trying to buy up here. In fact, a lot of the brokerages in China couldn't process all the orders in their session because it was so many people trying to pile in. To me, ask yourself this, guys, and I know you guys are smart about this. So is that a sign of a short-term top, or is that a sign that this is going to continue to run in the short term? Now, longer term, again, we'll see where that goes. But I think we all agree is when the retail crowd FOMOs in, think of Bitcoin at its highs or think of lots of these other things, that's usually close to the end before they have to flush those weak hands out and bring it in for then a potential move to the next move up. So really the retail investor, will put an R here for retail. Retail buys in this upper range, and then the institutional money, or just the way that human psychology works, it wants to flush those players out. So it takes it down. Down here, these same people right here, the retail crowd, they start to worry. Oh my gosh, was I wrong? I'm down on my investment 10% already. All right, let me just get out. So the weak hands get out right here after buying up here. And then you know what happens? The next leg comes in. And this is it doesn't matter if it's the Chinese market or the US markets or oil or gold, it's all the same. In fact, recently we saw this in gold, right? We hit my 2660 level. Everyone was like, you started to see in the news like people calling for, oh, 3,000's coming, the retail crowd's finally getting involved. What happens? Oil pulls back Friday, it's down today. We'll take a look at that chart as well. All right, so just a little bit of insight there, guys, into that. And if you look at stocks, again, I mentioned JD, Alibaba. These stocks have gotten way ahead on their skis, most likely need to pull back after maybe today's rally. We'll see. All right. What else do we want to look at here? All right, so I did promise you guys that I would look at or I would show you guys my options portfolio with one of my options trades, my biggest options trade. So follow me over here. This is my options portfolio right now, okay? Now, throughout the rest of the week, I'm going to reveal all the rest of these positions. All the rest of these positions I will reveal. So again, I want to do it kind of where I show one each day and I can talk about it. But the one today that I wanted to show was my biggest one. I have over $400,000 in this options trade. It is a put trade on Meta. So Meta, again, the chart is into major resistance. Again, here's contracts, 60 contracts, unit cost $68.48. You can see it's trading right here, just down just a little bit on that. And again, you can see all the P&Ls. It's all there to be seen. I'm just not going to reveal what they are because I want you guys to, I want to be able to do one per day with you guys. But here it is right down here. Meta, the September 19th, 2025s, strike 260s. Right there, and those are the puts. So there you have it, guys, and we can follow this trade just like I showed you my FXI, which was the Chinese. I mean, think about that, folks. We literally had calls on the Chinese market. I had a massive call position. And listen, I made a lot of money on it. Don't get me wrong, 60K. But if I had held those, probably $500,000 worth in terms of profits. Incredible. It just shows you, like, listen, you look at me, you say, oh, he's traded for 25 years. Doesn't mean I make every decision right. And what you always remember as a trader is that a profit's a profit, right? Whether you make $5, $100, or $1,000, or $10,000, or $1 million. The point is you want to be consistent about it. It's not so much about how much you're making on each trade. It's the consistency of having a high win rate, which again is why I use the charts, because it allows me to figure out probabilities. And again, my goal, I'm not trying to win every trade. You'll never get there. I'll never get there. But what I want to do is I want to basically win 70 or 80% of the time, and then the numbers take care of themselves. All right, so again, we'll watch and see what Meta does today. Last I checked, it was around the flat line. You can see right there, per Friday's close, down about 5,000 on that, which again, on a 400,000 position is not really a big move. All right, we'll follow up. Tomorrow I'll reveal another key position in that portfolio, and again, I'll just keep on revealing one after the other. Now, I do want to go to the website here. I want to show you something else that I think is absolutely insane. If we scroll down, we're going to take a look at the Fed Watch tool here. So here's your Fed Watch tool, and you can find all of this on verifiedinvesting.com, updated every single day, sometimes multiple times a day. Now, the reason why this is pretty remarkable is that we want to follow the stats on whether or not we're going to see a 50 basis point cut in early November at the next Fed meeting, or we're going to see a 25. Over the weekend, this number was favoring by more than 50% a 50 basis point cut. Think about that. Think about that just logically, folks. I beg you. Like, so you're telling me the Fed is trying to tell us, and the narrative spin is that everything is fine, but the Fed had to cut 50 basis points in the last meeting, and potentially the market is at a 50-50 right now about whether they're going to cut 50 basis points again. Imagine them cutting 50, that'll be 100 basis points in about a month and a half, but there's nothing to see here, folks. Everything is normal, perfect landing, everything will be fine. Like, just use your common sense. We all just have to think more common sense-like, and the truth really just emerges, right? Just, again, probability. So what's the probability? If you told me a year ago that the Fed was going to cut 100 basis points at in total of 2 meetings, one after the other, is everything fine in the economy, or is there problems? And I would have said there's problems, and I still hold to that. So again, we'll know more this week with the jobs data, but remember, the jobs data will come out on Friday. Look for last month. Do they revise last month down even more? It was a weak number. Do they revise it down? But either way, we're going to follow this number right now. This is a 20. This is favoring a 25 basis point cut over the weekend. This is now flipped here. We'll watch and see where that goes. All right, guys. Lots to discuss. All right. I do want to just take one quick break here. We're going to quickly hear from 𝗟𝘂𝘅𝗔𝗹𝗴𝚅. Guys, don't forget, if you go to the homepage, in fact, maybe we can switch back to the homepage here, the data center, and just remember, under AI and algo trading, there's my 𝗟𝘂𝘅𝗔𝗹𝗴 reversal signal indicator. It gives the trades as they come. So again, check that out. The beauty of it is it's only $24.99, and it literally gives you the signals, when to short, when to go long. It works on crypto, it works on stocks, it works on the commodities on TradingView, all of the signals. It's universal on any time frame, daily, weekly, monthly, intraday. It's pretty darn cool. So let's take 30 seconds to thank 𝗟𝘂𝘅𝗔𝗹𝗴𝚅.
Have you considered enhancing your trading experience? We have an amazing tool for you. 𝗟𝘂𝘅𝗔𝗹𝗴ecie creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. 𝗟𝘂𝘅𝗔𝗹𝗴ecie Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with 𝗟𝘂𝘅𝗔𝗹𝗴ecie. Please visit the description below and sign up for 𝗟𝘂𝘅𝗔𝗹𝗴cie today.
All right, guys, back into the action. We're going to take a look at Bitcoin now. Follow me over here, guys. Bitcoin, actually a pretty big sell-off this morning. Take a look at this, guys. So we have Bitcoin, which was hammering on the daily 200 moving average. You can see here in the pink line right there. It got above here, and now look, it's retraced into that level. This is classic technical behavior in terms of a chart. So it got above finally, and again, it now is coming back in and pulling right back into that level. So again, you can see right there, that's your technical support. Now, if that gives way and price ends up closing below the pivot line, this is your bullish bearish pivot line. I've talked about this for a long time. That would be your technical support level right there. That's just above 60,000. And then again, you don't want to see, if you're a bull, you do not want to see that pivot line go. This one, this 200 MA, it's kind of okay. You can see it got above here and failed. If it gets above here, comes down, it can still go back up to the 68,000 level. But if you get below the pivot line, that's where I think you get a very fast drop down into support number 1 and support number 2, back to about 50,000 and change, maybe even 49,000 on Bitcoin. So Bitcoin, again, giving back some of its recent gains here. A little bit concerning because the stock market's not down that much. So again, you just want to be very aware that the correlation between Bitcoin and the stock market is at almost unprecedented levels right now. And that just makes me very nervous about crypto, because I do worry that at some point we're going to get that stock market correction again, maybe a 5% or 10%, or how much does Bitcoin drop, or how much does Ethereum drop, which has remained weaker than Bitcoin overall. All right, let's go to a couple of these other charts here as we go through. We'll take a quick look at gold. If we flip over to the gold chart, we can see here, gold, again, guys, right into my key technical level. I did short gold with my commodity members last week. So again, we are short, and we're short the GDX. And remember, I've been a staunch bull on gold, and I remain bullish on gold, right? So again, I think that's important, is that, remember, time frame matters. Short term, we're due for a pullback on gold. It's just that simple. So gold overbought. The hype was getting too big, too many retail, and I hate saying that because I fight for the retail investors, but I'm trying to educate so you guys don't become, or you don't fall into these loopholes, right? But the point being is, too many retail were piling in. The hype on the media was getting too big. It's due for a pullback. It hits the logarithmic level. As we go back to the chart here, you can see from 1980 to 2011, boom, right into that level. If we zoom in, you can see it pulling back as we speak. There's your little tail right there on that pierce. All right, so where do we pull back to? I think only about 2,500. That would be what I would look for. That'll be where I cover my shorts, and then I'll probably flip it right back into a long, as my mid to long term is still rosy. I just think, again, you got to flush out the weak hands, just like in other markets that we've seen over and over again. Silver, let's take a look at silver real quick here. Silver, if we flip back to the daily, let me move off the logarithmic chart. You can see it's doing exactly what the arrows told us we would likely do. Here's your classic double top here, double top right with there. It pierced, ran the stops on the bears, got them out, and now it's allowing price to drop. Look for a retail, look for a buying opportunity just below $30 per ounce on silver, and then I think you have a good chance of getting your next move to the upside. If we flip over to oil, oil, again, this has been the conundrum that has kind of perplexed me. And let's just follow me over here. I want to talk about oil. So I've talked about this last week with you guys. Oil, China's stimulating like crazy. Okay, if that's going to work, oil should not be below a breakdown level and should not have fallen last week. Like net, oil was down, yet China debuted so much stimulus. Why? Is it because China's not going to be stimulated? Well, they might be a little bit. But my guess is smart money knows the U.S. is slowing, and that's overpowering all this China stimulus. That's my guess on what's going on here. Ultimately, my 2025 target on oil is $50 a barrel. So $50 a barrel or lower. All right, so again, watch for that next year. We're getting towards the end of the year. I'll start giving you guys my projections for 2025. But right now, my first one is around $50 a barrel, maybe as low as 40, but that would have to be a pretty nasty recession to get us down in that range. Okay, And by the way, just a reminder, you have the continued, escalation of what's going on in the Middle East, and that still having no impact on oil, mainly because the U.S. produces so much at this point, but also because a weakening U.S. economy is trumping all of those other situations. It's such a big deterrent to usage or demand for oil. All right, natural gas real quick here, guys. Let's take a look at natural gas on the chart. Here it is, guys. We hit it. We hit it. I did add in my commodity service to my short on natural gas here. Again, I'm looking to add even to my KOLD position, but you can see very clearly there's your trend line. We finally have hit it. And look, you're already seeing a little selling today coming back in. So a little bit of a whipsaw, kind of freak out the weak hands on the short side. Let's see what happens here. I still have maneuverability in case I need to add to my position should it come to that. But again, I will keep you guys posted. You know I'm short natural gas in this range, and I've just been inching in little by little, every little pop that it makes, inching in, dollar cost averaging. And I found that that is the most efficient way to keep a high win rate. Okay, and again, I think that's important. Remember, it's not about hitting a home run. In fact, every time I try to hit a home run, I end up striking out essentially on a trade. That's why you have to understand it's about probability and a singles and doubles hitter. One of my favorite baseball players when I was growing up, I used to live outside of Boston, then I was in New York, Wade Boggs. He got to the Hall of Fame not as a home run hitter, but as a singles and doubles hitter. And he, by the way, he lives down here in Tampa, so shout out if he's watching. But the point being is that that's what you have to do. The best traders in the world don't look for home runs. Those naturally occur just by, like Wade Boggs still hit an occasional home run. He wasn't trying to. The home run hitters, remember, guys, and this is called the game plan, but the home run hitters are the ones, they're always swinging so hard that they have a huge strikeout ratio. So their on-base percentage, their batting average is super low. You can't do that in trading and investing, because we can't afford to, crush our accounts that much on one big loser. We can't strike out. Singles and doubles gets you to the Hall of Fame. Ask Wade Boggs, buddy. He's awesome. And again, special shout out to him today. All right. On that note, guys, I got to get going. I got to get over to my trading floor, the Apex Live Day Trading Room. Don't forget, we have daily passes for that, weekly passes, and we're just about to debut some new cool features that we're introducing for the Apex Live Day Trading Room. Check it out there. I'll see you in the charts. Take care.